Oh boy, here we go again. Back to work tonight, guys. Hope you had a fantastic Wednesday. Back to work tonight, getting ready for Thursday's trading session. And we got a bunch of great trades setting up for Thirsty Thursday in the markets tomorrow. Not to worry, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money ahead of the holiday weekend. As always, before we jump in and get this party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And as always, if you guys enjoyed the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for Thursday. Got a lot of great trades setting up for Thursday. It was a relatively sloppy and sluggish day today across the Nasdaq. The S&P, oil, of course, made that bloodbath dump towards the end here. But I'll tell you right now, the sluggishness, the choppiness that we saw today on the Nasdaq and the S&P, something tells me we're going to make up for that tomorrow. Tomorrow, markets don't tend to stick inside ranges very long like this. So I would expect some pretty explosive opportunities and very, very optimistic for tomorrow. Everything is bearish right now. Nasdaq is bearish. S&P is bearish. Oil is very bearish right now. But I'll tell you guys, there's something about these charts here tonight that just tells me we might be in for a bit of a squeeze, a bit of a reversal here for tomorrow. I really like some squeezes, some reversals here on the Nasdaq and on the S&P. Oil is a little bit more difficult because of that big move down, but I think you'll see tonight's game plan. I think we got some really great options here to buy that bounce on the crude oil as well. Now, of course, I'm not just a perma bull on these markets. I definitely have some shorts I'm looking for as well. We've got some shorts on the pullbacks we're still waiting for from yesterday. And of course, we got a little bit of space here below us for some breakouts going lower. So I'm going to cover both sides of this. I would love to get that reversal here for tomorrow, but you know me, I'm going to make sure we're covered no matter what scenario we get here in the markets tomorrow. Now, speaking of tomorrow, before we jump in and talk about each individual trade I'm watching for Thursday, let's make sure we're all on the same page here for tomorrow. Tomorrow is what will likely be the last full day of the week. We have an early close on Friday, and of course, next Monday is a holiday. So tomorrow, really, there's a lot of anticipation for tomorrow, a lot of scarcity going into tomorrow. It's one of the big reasons why I would expect tomorrow, with such a choppy day today, I would expect tomorrow to have the potential to be a very, very good day tomorrow in our trade room. And again, we tend to have pretty good Thursdays in our trade room. So looking forward to some action with you guys tomorrow at the opening bell. The big news tomorrow morning is not that jobless claims. It is the personal income number at 8:30, and then of course the PMI number at 9:45. Make no mistake though, that personal income number is definitely the big headline number for tomorrow. And oftentimes these personal income, they call this the PCE number. The personal income number oftentimes does shake the market up a little bit at 8:30. Remember, be careful around the news. We're not trading the news tomorrow. We'll trade the reaction to that news, 8:40, 8:45, 9 o'clock, and then, of course, into the cash open, the U.S. Open at 9:30 Eastern Time. I would also keep in mind, too, that 9:45 Chicago PMI. It's a little bit hit or miss. Every once in a while, maybe every other report we get from the Chicago PMI does shake things up, so definitely consider that to be another potential market catalyst here for tomorrow. And as I've been mentioning throughout the week here this week, don't forget we've got the OPEC summit going on right now. We've got the NATO summit going on. Every single global leader, world leader is gathering together in all places around the globe right now. And the headlines that we're getting out of those meetings, those summits, those forums are really juicy headlines these markets and the algos can use tomorrow as well. So that is something to keep on your radar for tomorrow. So we may hear some more headlines out of Powell, out of the ECB, the rest of the NATO group meeting here the rest of the week. And again, keep that personal income number on your radar, because that is probably going to be the biggest catalyst that we know of, at least at this point here tomorrow. Also, keep in mind, too, there'll be no newsletter tomorrow night. Last video for me is tonight. We'll resume our normal schedule next week after the holiday. Wishing you all a very, very happy Independence Day and enjoy the fireworks next week. All right, back to our charts, though, here. I'm going to go over all my favorite trades in each one of these markets, whether you trade one of them, them or you trade all of them, make sure you stick around all the way through to the end. You'll learn something new throughout the entire video tonight. Different trade ideas, different advanced tactics, and I try to wrap things up with the best stuff towards the end of these videos. So make sure you stick around all the way to the end here for me. Let's jump in though first on the NASDAQ. NASDAQ is on our list first here tonight. What do we have going on right now on the Emini Nasdaq? Well, first things first, the Nasdaq and the S&P are really are markets right now that we have to trade what's in front of us. And what I mean by that is we're coming out of that big move down yesterday. All the headlines from today are saying bad news this and bad news that, right? So it's very easy to get wrapped up in a lot of different directions right now. What I would encourage you to do is trade the chart in front of you. And the reason I say that is, well, you're going to see here tonight as we go deeper into this lesson tonight, if you just simply analyze the chart in front of you, a lot of this will begin to make more sense than if you try to blend together all the news headlines, the long-term trend, the short, right, all that stuff overcomplicates things. So the two key components right now on this NASDAQ chart, which are kind of tipping me off here to a bit of that short squeeze situation for tomorrow. There are two key components that are going to tell me where the best trades are. One of them, which is really the most important component here, is that range rotation off of the low. What do I mean by that? Well, ranges. There's a range of the chart, right? Real messy session today. We pretty much began the day in a range, and now we've gone lower. And now as we go lower, you'll notice bears are coming in. They're unable to take out that low. And now this momentum should carry this market and try to take out some of these highs up here. We call this rotation off the low. The market is rotating from below a trading range and trying to return that rotation back up to the other side of this range. You'll also notice now, right, that gives us a lot of bullish momentum going higher here. You'll also notice now with that higher low, we now have a very difficult job as this market goes higher for the bears to come in and short this, because now we have that higher low. We don't have that clear line of sight for bears to come in here and short back down to retest the low. The bears, they want to go back and retest that big low right now, and that trend line is a big obstacle for them at this point in the process. So combine those two together, you've got your trading range with the market now rotating off the low. Combine that rising support trend line, and you have a recipe for sellers getting squeezed on this and potentially really snapping back up here. You know, dare I say, I've got my squeeze target listed up there, 1186, 860, 11900, but it's not impossible to think here that 12,000 could be the end result of that short squeeze going higher. Now, we definitely have to respect the bears. The bears do have control of this market still. But again, it's tough to want to sell this market right now, because as we go higher, now you've got all that momentum turning, that rising support trend line. As we go lower, now we're running right into that low. So it's very difficult as we stand right now to find any real decent short setups, unless, of course, we can get that nice big move up and then look for that dump back down. That would really be the best place to look for a short going lower or a breakdown going lower here. And we'll talk about those details, of course, as we go deeper into this lesson tonight. So how do we buy this market? What do the buyers want? The buyers want to buy that double bottom, right? Buyers would love double bottom low. Buyers would love that short squeeze going higher. Let's cover some of those ideas here on the NASDAQ, and then we'll kind of expand into this on the S&P. The S&P is a little bit different, but very, very similar here to the NASDAQ. There are really three different ways I want to buy this thing as it goes higher. You ready? Three easy breakaway patterns here as we go higher. The first one, easy one, two-try trap. Let's say we open up, strong blast up, shallow pullback, higher high in price, strong move, shallow pullback, higher high in price. Easy trade right there with a two-try trap, right? That trap below that low. One of my favorite kind of breakout trades, favorite reversal trades is that two-try trap. Now, sometimes what happens is that market that breaks higher like this, it starts to grind and grind and grind. These are even better. Anytime we see a pop and a grind. We can draw that trend line off that high. We can find a trend line off that low. That creates a channel, and I can go out and find my prior swings, and I can go in now for things like trap entries, failure entries, right? I want to get below that moving average. The same setups that you guys learn in the free trading class, that's what I'm looking for off of that low. Or maybe we see a pop up. We pull back. The bears, of course, are trying to sell into these highs up here. You would think they try to sell in these areas here, but now let's say the buyers come in and they jump off that moving average. What do we call that? We call that a 1, 2, 3 breakout, a 1, 2, 3 reversal. I'm not buying that first pullback, but you darn know I want to buy that first test off the low of that channel. One of my favorite tricks is draw that trend line off that high, draw it off that low, look left, find one of those prior swings, and I'll tell you right now, there really isn't any better entry when you have a 1, 2, 3 reversal like this, 1, 2, 3 move. All that momentum now will want to retest that high here. I like traps, I like failures, I like pullback combinations, right? Trap, failure, pullback combo. Again, all the same price action entry setups that I teach in our free trading course on our website, which, by the way, if you are one of the few people right now who haven't taken that free course yet, I know that most of you guys and gals have taken the free class. You've learned all the entry setups I'm talking about with this, and I'm always so amazed at how well you guys do by just taking the free trading course. But listen, if you're here for the first time right now, if you haven't taken that free class to learn all the setups, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link if you're like me and you hate missing the best trades each day, or you're taking too many losses. The roadmap that I teach in that free trading course will teach you how to deal with different types of market conditions, how to find new levels of support and resistance, how to time the entries like professional. You're going to love that free class there. Grab that link that popped up there and learn all the setups. That way, the next time I say strong move up and pop and grind, you'll know what time frames to use. You'll know how to find the entry. You'll know what to trigger that entry going long here. I really like that kind of, again, that squeeze going higher here right now. Now, how do I sell this thing? How do I sell it back down again? I'm going to cover that a little bit later on in this video, right? So how do you sell that big pullback? Stay tuned for more. I'm going to cover more of the short side as we go deeper into the lesson here tonight, because there definitely will be short side trades as we go higher here for tomorrow. Now, what if we go lower here? Right? How do I buy off that low? Because you know they want to take out that low, right? That's where the bears want to go right now. There's a range above us. Ranges are magnets. The market will swing up, swing down, swing up, swing down. I want to buy low. I want to sell high, right? Buy low, sell high, and trade that rotation back and forth. If we take out that low right now, how do I buy off this low? There's a really easy sequence you want to learn. As we take out that low, remember, we're bearish at this point, so I have to be a little bit careful at this point just to buy, right? We don't just buy at support in a bear market. We have to get some sort of catalyst, right? If I get a reversal, then I have plenty of momentum now to work with. But if I'm trying to buy off this low right now, there's no momentum on my side. I need something that can give me some juice behind my long setup. And to do that, we need to run some stops. We need to use the stop losses of the sellers in this example to really slingshot that thing back in. How do we do that? Two-try failure, right? Two-try failure. As we pull back, we take out that low. Bears come back to the moving average. Bears try once. Bears try twice. Now, once those bears are committed, think about where their stops are, right? Where are their stops? And your goal is to, in this case, buy right into those stops. Because think about it. If you're a seller and you get stopped out, what's your only option? To buy your way out. So when you buy into stops down here, you have the buyers buying because they're buying off support below range, and you've also got the sellers buying. If you can find situations where the buyers are buying and the sellers become buyers because stop run, bam, that is a money-making, very reliable trading opportunity. Now, your job is not done yet at this point. Once you get that failure and the market begins to pop and run higher here now, where do we want to go next? Where's the next objective? Where does the market want to go next? It wants to take out some of these highs. Remember, markets will rotate from one extreme to the next. So this is the objective. On top of that, we can measure the amount below the range and the amount above the range. And that really, obviously I'm drawing this up right now, but that's where the market wants to go, right? Take out that high, take out that high. The point I want to make here is that at this point now, we can find a new trend line off that high, draw a new channel off of that low. Again, you know by now, I love traps right below prior swings. That's where smart money traders are getting in. And again, this will usually be just underneath that 21 moving average. I can find traps. I can find failures. Any of the price action entries to talk about in that free trading course. Now, keep in mind, right? Keep in mind this little sequence. If you look a little bit lower down here, we've got another round of support down here. So don't be surprised if this market kind of shoots lower and then same thing, 1, 2, popping back up and finding that, right? And finding that channel. In all reality, this might be the best trade we get tomorrow. Right? It may take out that low overnight, run right into some of these big juicy support levels, 11,460, which is really just a major swing below a big range back here. It would make perfect sense for this thing to punch lower and then struggle and run right back up into that trading range. Again, very difficult to find some shorts right now. And again, we'll talk more about the short side here as we go deeper into this lesson. For right now, though, keep your eyes on those reversals off the low. And again, that squeeze running higher here. Using a pretty good game plan for that. Let's keep going. Let's keep going. Over to the S&P here. We'll talk about how to get some shorts going on the S&P. And keep in mind, everything we talk about tonight on the E-mini can pretty much be applied to the NASDAQ. Now, here's one key difference between the S&P and the NASDAQ. The S&P definitely feels a whole lot more bearish, right? Or let's say this. It doesn't feel as bullish. When you look at the NASDAQ is quite, you can see higher lows, higher highs. You can kind of feel that momentum turning off of that low. The S&P, you can clearly see, is definitely not that, it's not that dramatic, right? The big clue of this is they had that big move down, and look, they barely missed that low. They barely missed that low, and that opens up that rising support trend line that we talked about on the NASDAQ. What's the most important factor right now on the S&P? We're definitely bearish. Again, make no mistake about that. This is a bear market right now, 100%. So is the NASDAQ, right? The NASDAQ is also very bearish. But again, the NASDAQ and on this S&P, it's not easy to find a short trade here right now. There's my trading range. Right? There's my range. We go sideways here. We could have anticipated a range today. I was hoping we'd get that deeper pullback, get a chance to sell that today, but just never got it, right? So now at this point now, the bears have sopped up all of that liquidity. The market chops around, runs up, chops around, goes lower. Now, if I want to sell high up here, right? So imagine, right? Imagine now we're going to try to sell up here. That is not going to be an easy place to sell. Why? Because of all of this momentum. The momentum now will slingshot off of that low and try taking out some of these highs. At the same time, look left. You're going to obviously have a bunch of trend lines coming up here, right? So this thing keeps on going higher here. It's very difficult for a seller to come in, right, and justify shorting that move here. That is exactly why on both the S&P and the NASDAQ, I really like, and again, I won't repeat myself too badly here, I like that strong pop, that shallow pullback, that higher high in price, and that trap. I like that breakout going higher. I also like, of course, that pop and grind. One of my favorites right now, the pop and grind is a great spot. Find that swing, grab that pullback. Think about squeeze targets up there, 3870 to 3080 area there, which, by the way, was the deep pullback target from last night's video. If you watched last night's video, these squeeze targets are nothing more than those deep pullbacks we talked about in just 24 hours ago. It's amazing how much a day can change, right? It's amazing what a difference a day makes. And welcome to be a day trader. You know, if you're a day trader, you cannot be married to one direction, because you get stuff like this that happens every day of the week. And then again, if we go higher here, we hold that pullback, right? And we jump off that moving average now, I want to see that high, find that low, and then grab that, right? Grab that trap. Remember, an easy way to think about where that final target is up there is the first leg and the third leg. Okay, like a pop and a grind, right? A pop and a grind, same thing. It's that first leg and third leg, right? First leg and third leg. So if you're wondering kind of where do I leave that final runner target for a little more firework money, right? As we go into the holiday weekend here this weekend, that first leg, third leg is a really, really easy way to do it. We also talked about how we can buy off that low with that 1-2 running stops, and then buying it from there, right? We've covered all of that on the NASDAQ. That will also apply here to the S&P as well. How do we sell this sucker? How do we sell it? Well, the first things first is we have to get above these highs here, right? We can't be selling down here. Okay, there's no money to make selling low. You got to sell high. And you can easily argue there's that big move down from yesterday. You can easily argue that sellers are waiting up here to sell this thing back down. I'm not arguing the fact that there'll be bears waiting up here. What I'm arguing right now is I'm trying to make the point that this momentum will be so strong, those bears are potentially walking right into a freight train, and therefore it's easier to look for trades on the long side as we trap them in. How do I sell it though? What we want to do is as we go higher here, there's going to be some trend lines coming up. And so when those trend lines come up overhead, the challenge is, for example, one of my favorite trades above a trading range like this is to look for that deep pullback, use the amount below the range, the amount above the range. That pendulum swing, we call it, is a really, really valuable level for us. Again, at this point now, we're very bullish as we rotate up that low. I want to see buyers coming in, and I'm expecting buyers will try to buy this thing. I'm anticipating that. They're going to try to buy this thing, and as it goes higher, I want to see them try and fail. Right? I want to see them try once. I want to see them try twice. Now, the deal is on this one, and this is another reason why it's difficult to find a good short trade right now, is with these trend lines now coming up. My challenge is that if I say one try, two try, and I think, okay, where are my stops, right? Where are the stops? Remember, if I'm trying to buy off this low, right, I want to run stops because that's going to give me that juice I need going higher. Same problem here. As we go higher now, I'm anticipating buyers coming in. I need some sort of momentum shift, and to do that is that stop run. Now remember, trend line coming up. So I'm going to sell right there, right? That's my entry right there. That's a horrible risk-reward ratio. My risk now is here. My reward is right here. We got to do better than that, right? You're not going to make money long-term with that type of risk-reward ratio. We have to get something to structure this trade better. So here's what I'm going to do. We want to use that trap entry, right? As we pull back now, buyers once, buyers twice. This will be really the safest bet here for that short. It's not going to be an easy short to begin with, right? It won't. But this is the way you sell it coming down off those highs. You let those buyers, again, try twice because you're going against that flow of momentum. We need that catalyst, but we got that trend line coming up. And because of that trap. Now think about what the risk-reward ratio is now. What's my risk? It's right here. How about my reward? Right here. You can make money doing it that way, right? That is something that you can build your career on. If you're wrong, it's okay because your winning trades will be much bigger than your losing trades, right? Does that make sense? Hopefully that's a light bulb moment for you. That's exactly why traps are very effective. It allows us to structure our risk-reward ratio to be a much more desirable spot, and the more desirable it is, the more people are trading it. The more the self-fulfilling prophecy kicks in, and it becomes a much more reliable trade there. The only other way to do this is to get underneath this trend line and go in from that trend line. That's the only other way to do it right there. But now you're back inside that range. You're selling very low. This is, again, not impossible, but definitely not my favorite trade of the week here this week. But hey, we'll take whatever the market gives us. That's the way you want to short this thing as it goes higher. Now, let's say, for example, we get that 1, 2, 3, right? We get that nice big reversal. Right? We get that pop up, the buyers come in, 1, 2, pop, and they blast going higher, and we come in and we're like, oh yeah, baby, give me that long off that low. right? We go up, we retest that high now. Now we're up in a territory where, yes, you would think after that big drop down from yesterday, you would think, okay, this is where some of the bigger sellers are coming in. How do we sell this thing now? How do we sell it now? Well, again, remember, we're not very bullish right now, right? At this point now, this is exactly where that same sequence, right? Remember back here, 1, 2, up, and then find that channel. This is the same sequence, that sequence up here. Obviously the opposite direction, right? Backwards. So now as we go, again, remember, we're already getting that pullback, right? It's already retested now. Okay, the buyers, mission accomplished. They get their retest. We're up inside some major highs now. Now is the time we can start thinking about that short. We don't have that trend line to worry about anymore. Now we go out, wait for those buyers once, wait for them twice, hit their stops, and then as we go lower, right? Remember, we need some sort of catalyst. We need that stop run. As the market rolls lower now, we find that new channel. We grab that trap, and we grab that short off the high. Do you see how the sequence goes? The buyers pop it up, right? That strong pop with momentum gives us the momentum we need to buy that pullback. Okay, it may not keep going forever. It may not go back to 4,000 tomorrow. It may not, right? We may only get a retest of that high. It's okay. At that point now, big bears come in up top here because they want to sell high after yesterday's big move down. And now we rope in the weekends, right? Now the buyers try twice. Now we're thinking, okay, there's still a range down there. The buyers are struggling. Hit those stops. And then as the market rolls over here now, we find that new channel and we hit it. Trap, failure, pullback combo off of that high. And you know where the market wants to go at that point. It wants to go right back into that range and probably take out some of these lows down here, right? Just as a cherry on top. Keep that sequence on your radar. Again, both the long side and the short side, we do not need to be committed to only one side of this market. We can easily play both sides of it if you know how to structure momentum, how to balance risk reward, and how to find good levels of support and resistance. Now, as we go lower, the S&P, this is one big difference between the S&P and the Nasdaq. The S&P has a football field open down here, right? Wide open. Nasdaq, not so much. Okay, so be aware of this. The Nasdaq does not have as much open space down here. That's why I said earlier, the Nasdaq looks ripe for reversal, even if it goes a little bit through that low, because again, there's not much open space down here. If I had to guess right now, I would guess the S&P has more potential for a breakdown just because of the sheer open size that we have here below us. There's a range down here. So there's definitely more potential right now for the S&P, and that may easily drag that Nasdaq down right along with it. How do I sell this if we go lower? There are really three basic breakout patterns. We talked about this a little bit earlier, right? One would be a strong move down, a shallow pullback, a lower low in price, and that trap. These are very, very common. Just remember though, you want this strong move down to really push through those lows, right? It needs to be like a really, really strong pop down, right? Try trap. The next one is that pop and that grind. Sometimes we don't get that pop, lower low, and that trap, right? Sometimes we get a pop and it grinds down. Again, these are one of my favorites. They should be for you too, because they're very easy. Once you find that grind, draw that trend line down the low, up around those highs, right? I try to pin this stuff up around those big highs, right? Like that. Look left, go find some prior swings, because that's usually where all the big money's coming in, right above those prior swings for a trap, for a failure, for a pullback combo. And again, if you're wondering where that final target is, right? How far will this go? Remember, first leg, third leg, right? First leg, third leg. So it pops down, that's the first leg, right? Ignore the chop, and then use that third leg right there. That's where the target goes. Again, can help you fine tune that exit target as we go. Or maybe we simply take out that low, we hold that pullback, and we blast, right? That real strong blast, right? Remember, didn't do it here, didn't do it there. Okay, they got to hold that pullback and jump. Okay, remember that jump is really, really important, because if not, we're going to see something like this. right? If we take out that low, what's going to happen is it'll be a 1, it'll be a 2, and right back up again. Remember that earlier? 1, 2, right back up again. You can see an example right there, right? So we can't just sell it as it goes lower here. Range above, support below. Give me a retest of that low, pull back to the moving average, and jump off that 21 EMA. Mark off that low, mark off that high, and repeat after me. First test is the best test, right? First test is the best test. This could be a trap, a failure, a pullback combo, right? Any of the price action setups that we teach in that free trading class, right? Remember, first leg, third leg, right? Don't worry about the size of the middle leg. Okay, it's that first leg breakout that gets anchored in the pullback, and that tells you where that fine-tuned exit target is going to be. All right, boy, I like, again, there's a lot of really good setups here setting up right now. I like the short squeeze. I like the squeeze, but make no mistake, I have no issue with being a seller tomorrow as well if you do that short setup as well. Looking good here. How about some oil? Boy, oil got the breakout today. We talked this last night, right? We talked about how the oil was going to break out today. Perfect example. I'm not sure if you guys saw this, but perfect example of a pop and grind, right? Oil, of course, rises higher. There's that pop. Is that grind right there? Right? Is that grind right there? Easy. Mark that high. Bring it down to that low, and where do you think the buyers want to come in? They want to buy right there. Now, here's a really good example where the market may not keep going forever, right? It may not keep going forever. It's going to want to retest that high. At that point, this was, of course, today. We had the inventory report today, 10:30 Eastern time. We had a big oil report today, and for whatever reason, the market did not like that, and of course, it dumped off that high. The most important thing about this, though, is we talk about these pop and grind channels all the time on this video, and you've got one right in front of you right there on that breakout from earlier on in the session. Bottom line, though, what are the most important keys to making trades tomorrow, right? We know what happened today. You don't need me to tell you what happened today. You saw it for yourself. What's the key component? There are two key components here on this chart. One is a strong move lower, right? Anytime we see a strong move in one direction, we expect a pullback and a retest of that high. That's all we know. That is all we know. Okay. Now, yes, a lot of times, that strong move up or strong move in one direction will produce another leg in the same direction, right? That is very common. It is very common for a strong move to create a symmetrical leg, right? Very common, but that's not what we know is almost certain, right? What we know, remember, trading is, there's so much gray area in trading. We're always looking for a situation where we know we can really rely on what's coming next. Strong move up, we expect a retest of that high. That's all we really know. So now when you apply down here, strong move down, what do we know right now? We know all of that strength means the bears are going to want to retest that low. This is a very, very big part of this. Okay, after that low now, I can look for a double bottom reversal, which I think might be the best trade for tomorrow. Or we may see it go lower with a breakout, and that breakout could easily take out the rest of this pendulum swing, which puts us down at 108.09, which of course is the pendulum swing off the range from yesterday. The amount above yesterday's range, below yesterday's range, 108.09, is a very likely candidate if we go lower. So one very big clue here is that strong move lower. Anytime we see a strong move, we expect another leg in the same direction. Next thing is one of the most interesting parts of this chart tonight, and that is symmetry off the high. Now, symmetry comes in all shapes and sizes in the financial markets, right? Measured moves. In this case, you'll notice here, very sneaky how they did this today. We open up here today at 111.86. You'll notice the amount we go up from the open, right? The amount of green above today's open. And remember, when I say open, what I'm talking about is the 6 p.m. Eastern time, the Globex open, the electronic session open. We don't trade the pit session any longer. The pit is probably a parking lot right now, or some condos, right? Those are gone. The pit session's over. There's a little bit still lingers around the pit session, but it's all Globex. It's all electronic trading hours, ETH hours. The amount we go up, look at how similar it is. We go back down again. This is very common in the markets. We saw an example of this yesterday on the S&P, where the S&P went up and then dropped and went all the way down outside of that range, equal, symmetrical off that high. Very interesting how that also puts us at a couple key support levels with a range right above us here. Ranges act like magnets. Now, I am not saying this is a bull market right now. It's a very bear market, a very strong move down. What I'm saying right now, though, is this is one of those markets where there is a very lopsided risk-reward ratio at this point. If I can just use stop loss some sellers, if we can trap in some bears, we might have a nice little short squeeze on our hand. And I would imagine probably trying to go back to that 112, right in the middle of that trading range, possibly all the way back to the side and take out that 114 level up overhead. How do we do it though? Right? How do we do it? How do I buy this market? One thing you got to remember is let's back it up. We've talked about if I want to be a buyer, I need to get 1 and 2 because I have to get those stops to get hit. Right? I have to use stops for fuel. Right? I have no momentum on my side. I need something else to give me a catalyst. So if you understand that idea, now let's go one step further, okay? The bigger the move, the bigger the 2 tries need to be, okay? So again, strong move, I need to use 2 tries, but the bigger that move is, the bigger the 2 tries need to be, okay? I want you to think about that. That's going to be a big part of this in a way of picking the bottom, if I can say that correctly there. I don't like saying pick a bottom here, but the way to time the entry on this when you see a big move like this is to wait for a bigger 2 try. Okay, so here are 2 ways to safely trade the turn on a market like this. One is the easy one. You wait for it to go up. You wait for bears to come in. They come in. They retest that low. Right? What do we always say? Mission accomplished. Victory, touchdown, whatever you want to call it. Right? The bears take out that low. Now, with all the sellers getting in and now taking profit at that low, now is when we can go out and now start being a little more aggressive on the entry, right? I get the bears once, the bears twice. Again, this is not where bears should be selling, right? They shouldn't be selling at the lows. The smart money bears are selling up here, and I will talk about that short in a second. So give me a couple seconds here on this. Okay, so if we go back to retest that low right now, then we go bears once, bears twice. These are the weak hands, right? These are not the professionals in the market. They wouldn't be selling this low, right? They're selling up here. Anyways, once those bears try twice, stops are sitting right there, and we can light those stops up here with a 2 try failure. Okay, watch that trend line coming off that low. That's an easy giveaway for a jump back higher. Then as we go, watch that pop. And as it pops, find that high, find that low, drill down, find your traps, right? And we're jumping in off of that channel. Okay, again, retest the high, easy first target, leave that runner, right? Let it run. That'll be a very nice runner target potential here for tomorrow. That's the safest way to buy that, what we call a double bottom reversal. The next one is a crown reversal. Again, it's a very big move down, so we have to expect a bigger 2 try here until they retest that low. Once they retest the low, the pressure's off, and now we can be a lot more aggressive with it. What you want to think about is you want to think about those bears trying once, bears trying twice. And the best way to do this is you have to remember that before we retest those lows, the bears are going to be trying to sell high, right? They want to get in, they want to sell high here. So just like we talked about earlier on the Emini, I don't want to buy in that case up here. Okay, this is a really dangerous spot right there because as you buy here now, right? Remember, here comes your risk. Here's your reward. Now, given there's a potential big reward there, but you got to remember though is that as this thing goes higher, more bears will come in and try to run this thing lower. So until we retest that low, you want to think about, can I get a trap entry? Okay, this is by far my favorite way until we retest that low, right? It's the same thing, a 1, a 2, but I want that trap low. That way I'm buying very, very low. Then by the time the market goes back up here and we see another round of bears coming in, I've already got my first target hit. my stop's the point of entry right now. It's a low stress way to do it. Does that make sense? Right? Again, before this pattern's required before we retest those lows. Once we retest those lows, now the bears got what they want. Now be a lot more aggressive on the reversal there. Okay, but again, in this case, because we know those bears will keep on trying to sell as it goes higher, we have to really try to get in as low as possible, right? We're not trying to buy it as it goes higher because, again, we anticipate more bears coming in to finish off that move. All right, I know that was kind of long-winded and kind of complicated, but hopefully that makes sense. The bigger the move, the wider the two tries, expect that reversal or that double bottom there off that low. How do we sell this market right now? What's the best way to sell it? Well, as you can see, I got my channel drawn up. Off that low, off of that high. Traps are always where the money is, so find those prior swings. And because we have such good symmetry off of that high, and obviously, again, we're expecting that retest of that low, what I'll do in this case is look for that same two try. 1, 2, and that trap, right? That trap back down again. That's the best way to sell this thing as it pulls back into that sell zone. And remember, we could easily get that short, retest that low, and then all of a sudden now, 1, 2, and squeeze right back up again, right? Want to retest those highs and potentially get that run back higher. Okay, so think about those two setups. One of them, of course, being the short off the high, and then, of course, that pullback or that retest that low and that two-try failure as we go. What if we go lower here? Right? What if we keep on grinding down and keep on grinding down? You know this already. You know this already. Same idea. Right? Now, if we keep grinding down right now, then obviously this symmetry clue is blown out of the water. And of course, the more momentum we get, the more likely we are to get back above that moving average, right? Above moving average, that trap, that failure, and that retest of that low. So if we keep on going lower, bottom line, if we keep on going lower here through these areas of support, that is a very bearish clue, and we could be a whole lot more aggressive with a trap set up, with a failure set up, and again, back to retest that low. And then who knows, 1, 2, right back up again. Keep your eyes on that short, on the pullback, that double bottom reversal. These could really be some nice trades for us tomorrow as we go off into a holiday weekend tomorrow morning in our trade room. So now we get a pretty good game plan for tomorrow. I like some of these short squeezes, but again, make no mistake, we'll trade whatever the market gives us. If we get a nice little short off this pullback, we'll definitely be happy with that as well. Speaking of tomorrow, back to work tomorrow morning, 8 o'clock Eastern time in our trade room. The game plan is mapped out tonight on this video. Tomorrow, hopefully I'll see you there trading right along with me. I'll tell you right now, if you're looking for a good place to learn and trade along, you're going to love my trade room. I have all the chart templates, all the software tools, all the worksheets to follow along with me to qualify the trades with you tomorrow morning. All I need right now is you. So what I'll do is I'll put all the membership links, all the free course links. I would definitely recommend start with a free course on the website. Learn the basics, get going in that direction, and then you'll be ready to trade with me tomorrow morning or every morning in our morning trade room. As always, guys, thank you so much for watching all the way to the end. You are the reason why I do these videos. I appreciate your dedication and watching all the way to the end. Now get some rest tonight. Get some rest. Busy, busy day tomorrow. And as always, if I don't see you guys tomorrow in our trade room tomorrow morning at the opening bell, have a great, great holiday weekend. Be safe. Careful with the fireworks this weekend. Make sure you come back with all those fingers and toes next week. And we'll see you guys back here on Tuesday evening for our next edition of our nightly newsletter. Guys, my name is Joseph. Be well. Be nice to each other. Have a great, great weekend. And be here next time. Adios, amigos. Bye-bye for now.